This is Mark Anthony with Mercury Time Price Analytics. Thank you so much for taking time to watch this video, and this will be a very important video, I promise. Today I'll be talking about our algorithmic trading system, specifically with regard to NQ futures. Now, it works the same way with S&P 500, but I wanted to do this video on the NQ because what we've seen over the last couple weeks is some of the most amazing, violent volatility in NQ that we've seen in an awfully long time. And many trading systems absolutely buckle under this type of volatility. Trading systems generally have a problem when you get really high volatility, but they also have a problem when you go from quickly transition from low volatility to high volatility. With our system, it doesn't matter. High vol, low vol, no vol, it doesn't matter. If you've watched some of our other videos, I've mentioned that our systems are built on the same mathematics as the institutional algorithms, and you see evidence of this every day. But how can I make that claim? Well, trading systems that are built on price, and that's the way most of them are built, they're just not repeatable and they're not reliable. Why? Because price starts at zero and hypothetically goes to infinity. How do you anchor something that's completely linear? You can't anchor anything to that. Okay, but time is the key, because time is both circular and linear. Every good algorithm, including the institutional algorithms, that's the way you have to build them. Now, it's one thing to build an algorithm based on time dynamics. It's another thing entirely to build it on the exact same time cycle dynamics that the institutional algos are built on. The difference is our system is available for individual traders like you. What you see on the screen, the sloped lines are the algorithmic oscillators. All right, they're a function of time cycle dynamics, and it's what we call multi-time cycle dynamics. So literally every tick you're processing many different time cycles, and that's what gives you this level of accuracy, not just with price itself, but identifying the direction of the trend. We've also got here these horizontal lines, which are our Mercury bands. Now, the Mercury bands are long cycle algo pivots. For NQ, we do this once a week. So these are done on Sunday, and look at it this way. It's hard to predict the weather tomorrow. It's probably harder to do an algorithm for something that moves as wildly as NQ and do it on the weekend before the market opens and have it this accurate. As a matter of fact, the Mercury bands, this is the Mercury bands that were put out this previous weekend. So we provide this information to our subscribers before the week even opens. Now, I picked this area here for a couple of reasons, because this is probably the most difficult thing for an algo to do, because if we go back a little bit, you've got this very strong move up, and then you get this leveling off period. You get a sharp drop, and in this period here, this is low volatility, right? You had a little blip higher in volatility here. But other than this little blip here, this is relatively low volatility. But then you get this, and then you get this, and then you get matching highs, and then you get this. So how does our algo handle that? Well, let's pull the chart back and we'll walk you through it. Now, there's three sets of algos here. There's actually a fourth. We'll talk about that in a minute. But the purple line is the fast algo. Okay, you see that moves the most. The orange lines are the slowest. Those are the primary trend algos. And we put two of them on here because they run on two different time cycles, but also because by having two of them, it gives you a second derivative of confirmation that the trend is up or down, or in a case like this, it's just going sideways. And then between the fast and the trend algos, you've got the two white algos. So these are great to indicate pullbacks in the trend, but of the two white ones, and you can just see by the slope, the solid white one is the slower moving of the two. The dashed white one is a faster algo, okay? So just from fastest to slowest, purple, dashed white, solid white, and we've got, of the two orange ones, this is the slowest. You can see how gradual the slope is. And then this other orange Algo is a little bit faster trend Algo. Now, what this purple one is in between, this is cool. And I've never seen this anywhere outside of our system. This is what's called an acceleration Algo. And it does just what the name implies. You see when the trend changed here, you get this ballistic move right through it. But we're going to talk about that more in just a minute. So let's pull this back just a little bit. So you get this move up, and you get this V shape in the purple fast Algo. And it's not a coincidence that it stops right here to the tick, or I should say the confluence of the purple is literally to the tick where this Mercury band is. Now, when you start having crossovers, you know, a lot of folks will use like a 50 and a 200-day moving average, and when you get that crossover, it's significant. Well, if you're trading in these markets, you need something that's much, much, much faster. But conceptually, it's the same. When you get these things crossing down and through or up and through, that's significant. When you start crossing through multiple oscillators at one time, like it did right here, that's not just a warning sign. That's a big warning sign. So you got this fast move down, and it puts our traders on alert when you see a confluence of these things. When you see this inverted V shape in the purple Algo coming right at the spot where you've got a Mercury band, in this case it was 11,420. So that's your tip off that not only is it time to lighten up on your longs, to take some profits and to tighten your stops, but there could be something wrong. And you get this fast move down, what is that, 11,420 down to 224. So you get a fast 200 handle move down. Now, price stops here at the Mercury band. Now, you don't try and catch a falling knife, as the adage goes. You need confirmation before you hop back in, because it came down into this Mercury band, bounced, and then splat. So this is where the slope of the algorithms comes in. Now, if you're a super aggressive trader, you could have got involved down here. That would have been pretty risky. But what you see happen is when the purple Algo starts to turn back up, you get a push through, up to the Mercury band, a little back test, and then when it comes back up, second mouse skips the cheese, right? Wait for confirmation above this. Now, that's still real early to get long. Personally, I want more confirmation than that. I want a higher probability trade. Look, to use a football analogy, you want to trade between the 20-yard lines, all right? When you're trying to enter trades at extremes like this or this, the risk picks up exponentially at those points. So forget about trying to catch a falling knife. The meat of the move is between the 20-yard lines, again, to use a football analogy. So the other thing that you want to watch is when you've got multiple algo oscillators have confluence at the same price. So right here you have the dashed white one going sideways, and you have the slowest, longest algo, this orange one, going sideways. So it's too early to do anything, because at this point you don't know whether this is going to turn back up or if the whole structure is going to roll over. Now the primary trend has been up. If we pull this thing back, you can see the slowest algo, the orange one. This is decidedly an uptrend. But when you see something this violent, a 200 handle move down, and you see the primary trend go sideways, well, you don't know if the next bounce up to this is going to be it, and then it's going to roll over again. I mean, remember what happened in February and March. So you need more confirmation than that. So let's talk about where that confirmation made evidence of itself. So remember, crossovers are important. So you get a bottom here in the fast algo, and it comes up, and what does it do? It comes back up right to this spot where the white and the orange are, and then it goes sideways just a couple of bars, and then it takes off again. And it cuts through this purple one, and let's take a look at what price is doing at that time. So price comes up here into that acceleration algo. And when price moves a significant distance, and you're talking about what, 224 to, what is that, 3? I mean, that's a pretty big move in and of itself. So price comes up, stops to the dime, and you'll see price stop to the dime or within a couple ticks over and over again. Now, remember, second mouse gets the cheese. Well, when you're trading in Q, which is like trying to grab a tiger by the tail, sometimes the second mouse gets eaten too. All right. So when you're trading in Q, it's often better to wait for the third mouse, the fourth mouse. So let's talk about that. So you come up here, you find resistance at the confluence of the white and the orange algo. You get a little pullback. Now you come through, and the way this system is designed, price will move from level to level to level. So now you come back through the white and the orange, and you come up, and your next resistance point is here at the purple one. You get a back test. Comes back up, stops again, and this is where it gets exciting. This pullback, this is the one where you start licking your chops a little bit, because now you've already had the fast algo turn up. You're starting to see the white one start to turn up. You get this little pullback, and where does it stop? Literally to the tick at the very strongly upsloping purple algo. And it finds that little support, and now you're starting to get a little action. So now you come up, and with that thrust right there, you go back up, you get price acceptance over this purple algo, you get price acceptance over the white one, and you start to begin negotiating this second trend algo. Again, the orange ones are the primary trend. This is the longest algo. It's got the most gradual slope. And then you've got this one. And it's so important to have two trend algos because it gives you, see, we like trading with third and fourth derivative probabilities in our favor. So you're not guessing. You're getting confirmation. Now, this is where it gets really cool. Our algorithms are designed so that when they get you in the trade, you will typically, not typically, almost all the time, your trade will be aided by either a bull trap or a bear trap. Now, what do I mean by that? Well, if you've just gotten long, what you want to see is a bear trap, because when the stops of those folks who think this is the next move down, when their stops get run, then you get this. So our systems are designed so that when they trigger long, shortly thereafter, you're going to get a bear trap. And conversely, when they trigger short and price starts moving down, and we'll go back, we'll show you this, the thing in advance, or in reverse. So here you have confirmation this thing's starting to break down, all right? And, you know, if you wanted to be aggressive short, you could have got short right here below the second white line. But you get this move down. And what makes this so violent is not just that price came down. What makes it so violent is here's your bull trap. You know, people saw this, and they saw this nice move up. And they say, okay, well, this just ran stops down here, and that's going to go back up. Well, no, it's not going to. Because when you've got the fast algo turning down at that violent a slope, and you've just crossed through both of these white algos, and they're both rolling over, this is not a place where you want to be getting long. This is a place where if you were long, this is your last bailout spot here, because it's going lower. The slope of the algos and the confirmation by the three fastest ones, this move back, that was the spot to get out of Dodge. Unless, you know, if you're a long-term trader, then that's a different story. But if you're day trading or swing trading, this back test up in here, this is going to fail 9 times out of 10. All right, so now we get the move down here. And we've talked about this condition. So here's where this bear trap gets so juicy. You come down here. Now, at this point, and some of the best bear traps are when you get little overshoots of these algos, all right? Now, it would have been prudent if you got in here, for example, you should have taken incremental profits up here and moved your stop. So if you were long in here and you got this nice move, well, you're not going to have your stop down here at even. You should have already taken some profits and trailed a stop. So, even if you get taken out about right in here, you're not, you don't wait for a round trip to take all your profits back. So you had multiple opportunities here. You long entry right here, take your profit in portions, tighten your stop, comes down here. Now you're out of the trade. You booked a real nice profit on this, right? It comes down here and you're saying, is this going to hold? Well, you don't have to guess. This bar comes down here, goes back up, and comes right through all of these algos, and then it's gone. And once it came back up from here, back above the purple line, well, you've got all this evidence that momentum had changed. This algo had turned up. The solid white one from here to here, that's a very subtle change. Again, from here to here, where this comes back up and through, it's a very subtle change, but it's a slow-moving algo. And if we take this one here, which moves slow, subtle changes in slow-moving algos lead to big directional moves. Again, this one here doesn't move that fast, all right? So you're just looking for very subtle change. So from here to here, you have that subtle change. The white one from here to here, you have that subtle change. But then you say, okay, well, let's work our way back. Now let's look at the faster ones. Well, the fastest one bottomed down here. And the second fastest bottomed here. So when it comes down here and goes through all these, and what did it do right here? Why did you get such a violent move from here to here? Well, look, you've got one, two, three, four algos sitting right together. And that's what I call an algorithmic cluster. All right, algorithmic clusters are when you have more than two algos sitting at the same spot. And when price goes through those algorithmic clusters directionally, and you don't try to predict, all right? Now, in this case, it was pretty obvious. But when you get price to go through algorithmic clusters, this is the kind of stuff you get. Practically no pullback, and you get the second leg. Then you get a little mild pullback, and you get this super violent third move. Now, from the time here that it moved up through this cluster, let's just call that, what is that, 3,000, so what, just call it 310. That's a big move up here, and it happened quickly. Now, let's take this next piece of it. Now we've got the day trading trend, the two white oscillators going up at just a vicious angle. You've got the faster of the two trend algos trending strongly up. You got for a long cycle, slow moving algo here, that's a pretty dramatic change. So you got everything working in your favor, all right? And when you see these algos go from all being compressed to all starting to space out, that's a lot of strength. So after this monster move, you get this little pullback to where? The confluence of the Mercury band and the white day trading metric, so the solid white one. You get a little bounce. There's a little hiccup here. You get this move down. Well, the trend hadn't changed. So if you didn't catch this is your buy on the dip. As long as this trend holds, this orange algo, you're fine. And you got additional confirmation because you got a Mercury band right here. So when you get this move down and this move back up and it takes out the high of that red bar, then you're getting this stuff again. Now, here you get some choppiness. Why? Because when price gets back up to this point, folks are wondering, all right, is it just going to come back to test this level and roll over? So this is a little bit of a process. But look where all this happens. It all happens above this red Mercury band, and for the most part, above the confluence of these three algos. And then it goes again. Now this, you can see when you get this kind of stuff here, it's getting a little bit violent. Little pause there, folks. We've got 4 kids, a dog, and 4 cats. So moving back to our regularly scheduled programming. Now, this is where it gets a little bit dicey, and you can still play the long side. I mean, they were really taking the shorts to school here. But, you know, every one of these little pullbacks, you can see that the trend is intact all the way up. And here's where it runs into problems. And you get another one of these violent pullbacks. Now, at this point, when you see this kind of stuff, then for me personally, I'm not interested in the long side after you get this kind of run and you get this type of violent move. So at this point, you have to be careful, but the algorithms will tell you where these back tests are likely to fail. You get this violent move, looks like, you know, eyeballing it, a couple hundred handles. And you come back up here. And so, for example, if you were still, for whatever reason, if you were still long after seeing this, well, this is your opportunity. You know, when it comes back up into this algo, there's nothing left up here. So this is your last opportunity. If you were long, you got to get out there. You get another violent move down, and it holds again. You know, the bid under this market is amazing, but you can see where it holds, because if it doesn't hold at this trend algo, well, guess where it's going? It's coming right back down here. So let's pull this forward a little bit more. And as you can see, there was a whole lot more to go. So you come down here second time into the trend algo. And look, you know, if you ask me, well, is this an aggressive dip buy after seeing this? It sure is. But guess what? If you're buying this dip buy here, what I love about trading with this system is that you get very fast feedback. If this doesn't hold, you're going to know pretty quickly that you're wrong. You can use a tight stop and you're done. So you could take a shot here. It held. And that was, what, 5? It's hard to see because the right side of our screen is a little bit blocked out. 550 or something? Yeah, it's right here. About 550. You get to move back up. And once again, it holds. Now, you're getting late stage when pullbacks. Remember, let me go back a little bit. The pullbacks before, they weren't a process. They were an event. It's one handle, back up, pullback, one bar, excuse me, one bar, back up, one bar, back up. Now, when you start seeing this, now if you didn't have any of this on the price chart, you may not think, you know, too much of this. But when you start seeing this up and down at a trend algo, you know, then you have to start wondering how much more movement this has. Well, it had quite a bit more. So this holds, it comes back, and it goes again. But you can keep buying these dips at the algorithmic support lines. Now you got this violent move up, you get a little sideways move. It comes up, goes back down through the purple, the dashed white, and this time it didn't even want to come back to the orange. Now, there's an old adage in trading. Fast moves come from failed moves. Now, what do we mean by that? Well, I'm sure there were a lot of folks after seeing this and this and this that when you got this pullback here, might have tried to short this. And if you shorted it here and you trailed a stop, you made money. But when you had these deep pullbacks back to the orange trend algo, and you get this action here that comes back up and gains price acceptance again over this spot, well, the failed move in that adage is the fact that it didn't even want to break the day trading algo, let alone come back to the trend algo. So you've got a failed move lower. And you get this move up again. And now, this is where we're starting to get into these blow-off moves. And I want to again point out what happens when you get up into these Mercury bands. Mercury bands, when you get these extended moves, that's where you have to be on alert for reversal. Now, we'll just pull this up and we'll finish this video here. This is the kind of stuff that we had this week. Now, this is getting out of line. This is the kind of nonsense that indicates your late stage. Kind of looks like an EKG, quiet, 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 boom, 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 boom. That's not good. Can this go higher? Sure it can. This is not good action. And then you get more compression, and then you get this. Lower high. Now, the trend, these are still moving up, but this is getting really, really dangerous at this point. This video has been recorded on August 29th. What you've got in the market, and the purpose of this video is not to be a market commentary, but when you get this extended, you don't have many organic buyers, meaning you don't have a lot of people initiating new longs. You don't have a lot of people adding to existing long positions. So you don't see a lot of organic buying. And what happens when you get that stretched? In the absence of organic buying, the only thing that takes the tape higher is repeated short squeezes, which is what the institutional algos will do that all day long. But here's the flip side of that. Institutional algos, and they love doing this on ES. They love to run stops on ES. But I get asked this all the time. How do you know that you may be getting close to an intermediate high? What gets you to an intermediate high is when the algorithms really don't have much to push higher because you don't have that organic buying or adding to longs. And what happens is each subsequent push higher gives you diminishing returns. Why? Because it doesn't have the fuel to squeeze higher anymore. It just doesn't have the fuel to squeeze higher. And so the algorithms will change direction and start playing the downside once they see that they're not getting any more juice from the short squeezes. And this was a massive short squeeze here. So can the tape go higher beyond this 12,000 in NQ? Sure it can. But this looks a whole lot more like the formation of an intermediate top than it does a consolidation to move higher. So if you have any questions, I meant to show this in the very beginning. And this video went a lot longer than I thought, but there is so much breadth of detail and mathematics in these systems that I'll start doing a video that's supposed to be 10 minutes and go 30 minutes. But I'd rather give you more information rather than not enough. If you'd like to get a hold of me, my email is markanthony@mercurysignals.com. Our website, mercurysignals.com. Twitter, you can find me at MC2085, MC2085. And if you haven't been to our website, what I showed you on this video is just a very small part of what our systems do. So if you want to find out some of the additional things that our systems are capable of, please watch some of the other videos. We give you all of these systems for one price. Literally any one of these could be its own trading service. We are committed to not only giving you algorithms that are just as accurate as institutional algorithms. And in some cases, I guarantee our stuff does things that theirs doesn't, like our Saturn GT40 predictive algorithm. But we want to give you a better value than anything else on the market. We literally have more than a dozen algorithmic systems that are all bundled together. So whether you're a short-term, high-frequency intraday in and out trader, or you're looking for those one or two of the highest probability moves each day, or you're a swing trader, and swing traders, you've got different variations. You've got short-term swing traders looking for moves during a couple of days, couple of weeks. You've got longer-term swing traders. Whatever discipline of trading works best for you, we give you everything all on one live chart screen each and every day. I want to thank you so much for watching this video. More than anything else, I want you to know that God loves you very, very much. The mathematics in this system come from a number of things. They come from cosmology, the origin of the planets, from astronomy, many numerology in the Old Testament, a number of things. But I just want you to know that that we're all going through difficult times right now, and it doesn't matter how much money you make. Money doesn't make you happy; it makes you comfortable. Okay, we're all going through a lot of things. Our kids are going through a lot of things right now. If you've never had a relationship with God, more than any other time I can remember in my almost 60 years of life, this is the time. If you haven't thought about a relationship with God, I urge you, invite God into your life. We don't know what's going to happen going forward, whether things are going to get good, bad, or indifferent. But you know what? You can deal through a lot in life. But it's very difficult to deal with anything of significance without God. So I want to thank you again for your time. God bless you. God bless your family. And we hope to see you again soon.